Good afternoon. George Cavaligos for HFT Bonds. Day 11 in the range now. Interesting stuff. Big jumps in open interest yesterday in the 10-year. I'm assuming that that's hedges for today's auction. That went okay. Also in the 5-year, which was kind of interesting. Maybe some short hedges there for what? I don't know. A lot of interesting stuff going on with the repo market and all this other nonsense because of this threatened, default. T-bill market's in disarray. I'm seeing comments now that a lot of the T-bills that have, late October maturities are not being accepted as collateral. I think somebody's typing right now too that a lot of coupons that are also having late October maturities are not being accepted as collateral without a haircut, a 2% haircut. It's going to cost more to trade, basically. Let's see. Tomorrow's the 30-year. That's the key. You know the rule. You've seen it here before. What is it? 32 out of the last 37 bond auctions since we went to monthly bond auctions. If you bought the bond auction, you were positive 24 hours later. I want to say it might be 31 out of 37 now. I think last month was a scratch. So we'll see. We've been in this range 11 days. I hope that means that we get a decent move when we break out of the range. Like I said yesterday, I kind of facetiously said I was going to leave a buy stop above the highs and a sell stop below the lows and go fishing. I probably should have. Wasn't much to do today. We did, thanks Steve, had a great trade idea in the chat today. We bought the market a little bit after the Fed minutes and took a little bit out of that. Not much else to do really, I think, today. You try to keep buying the market on these dips near the low end of the range. Low risk, possibly good reward. I still think that this is some type of a fourth wave consolidation that should be resolved by at least one more higher high. And if you do your measuring objective, we've been between on the bonds, 132 and 3/4 and 133 and 3/4 now for those last 11 days. It's a point. That means you go to 134 and 3/4. That's your simple measuring of breakout. Some people are calling it a flag, and if you look at it that way, if this is a bull flag that we're building up here, it's even more bullish, because then you go back to the length of the flagpole, which is from 128.5 to, let's say, 133.5. That's another 5 handles higher. That's a 137 trade. That'd be nice. It's a move. Personally, I don't care which way it goes as long as it moves. So I hope you guys are all with me on that one. What else? We get jobless claims tomorrow. There's a lot of debt overnight. We've seen some decent moves overnight. Buyers during the Asian session, and then sellers out of the London session, by and large. Not consistent like it has been in the past, but again, we're seeing those types of trades. And I imagine we'll see some hedging into the 30-year tomorrow. I would not be surprised to see the bonds take out these, this 132, 22, 23 area, which has been the recent lows by a little bit, and then recover. That's kind of something I'm keeping in the back of my mind as one of my Kmart blue light special trades. So, you got the game plan? You got the idea? Turn off the TV. I have a hunting show on right now. I had to turn off the whole President Obama nominating Janet Yellen, and he talked about how great Ben Bernanke and Janet Yellen have done. I'm old and my memory is shot, but weren't they on the Fed before all the mess started back in 07, 08? Wasn't the Fed given oversight over the mortgage market? They advocated that responsibility, and I personally think they've advocated any responsibility for anything except the big banks that own the Federal Reserve. They're taking care of their owners, and the heck with the rest of us, unfortunately. Thanks. I'll see you guys tomorrow.